Welcome back to XRP On Moon, where we break down everything XRP holders need to know, fast and accurately. Today, we have breaking news that could send ripples through the XRP community, literally. Former President Donald Trump has just made a move that directly impacts XRP, and whether you're a long-term holder or someone watching the charts for the first time, this is something you cannot afford to ignore. From policy hints to public statements, the implications of this action are enormous, and we're going to dissect exactly what it means for your XRP holdings. Over the past few weeks, the crypto market has been in a state of cautious anticipation, especially for XRP. Investors have been watching the ongoing regulatory landscape, the SEC litigation updates, and high-profile endorsements or criticisms, knowing that any statement from a political figure with influence could trigger immediate market reactions. And now, Trump has done something unprecedented that puts XRP back in the spotlight. While many expected a neutral stance or delayed commentary, this move is anything but subtle. It signals to holders and traders alike that the geopolitical and regulatory dynamics surrounding XRP are evolving faster than most analysts predicted. To understand the significance, we need to consider the broader context. XRP has always been positioned uniquely in the crypto ecosystem, fast, scalable, and bridging traditional finance with digital assets. Regulatory uncertainty has often been a barrier for its price potential, but political figures stepping into the conversation can act as catalysts. Trump's recent actions, be it a tweet, a statement at an event, or a direct engagement with crypto advocacy groups, serve as a signal that XRP is not just a speculative token anymore. It's becoming a talking point in mainstream financial and political discourse. This alone can create a surge in attention, liquidity, and potentially market volatility, but let's break down what this could mean for holders. First, visibility is everything. When a high-profile figure signals awareness or support, even indirectly, retail investors tend to react quickly, creating a wave of buying activity. Second, institutional attention can follow. Hedge funds, crypto funds, and even traditional banks monitor these developments carefully. Any perceived alignment with influential political narratives can make them reconsider XRP as a viable vehicle for short or long-term investment. And third, it affects sentiment more than anything else. Market psychology plays a huge role in crypto. Confidence breeds momentum, and confidence is exactly what Trump's move might be injecting into XRP's ecosystem. Now, it's important to note that while this development is promising for holders, it's not a guarantee of price action. The crypto market is highly reactive, and while a statement or endorsement can spark momentum, underlying fundamentals and liquidity remain critical. That said, timing is crucial. Observers who understand the nuance behind political signals and regulatory developments will be better positioned to navigate potential market swings. This is why staying informed through credible channels is more important than ever, because XRP's trajectory in the coming weeks could hinge on both the political and financial narrative that's currently unfolding. Today's news is a clear reminder of how interconnected XRP is with broader financial and political events. Trump's recent move may not translate immediately into market gains, but for holders, it is a signal. XRP is back on the radar in a big way. Understanding the implications, anticipating market behavior, and maintaining strategic patience will be key for anyone looking to capitalize on this momentum. Holders, analysts, and traders alike should pay attention because these developments could set the stage for the next significant chapter in XRP's journey. Following Trump's recent move, the XRP market is now entering a phase where speculation meets real potential. What's striking is how quickly investor sentiment has shifted. Social media buzz, analyst commentaries, and trading volume have all begun reflecting a renewed confidence in XRP. This is not just about price spikes or short-term hype, it's about positioning. XRP holders are now evaluating what this political development means for the long-term trajectory of their holdings, and the market is responding accordingly. For anyone who has been watching XRP quietly from the sidelines, now is the moment to understand the deeper implications beyond the headlines. The first key impact lies in regulatory perception. Historically, XRP has faced scrutiny, with the SEC lawsuit acting as a persistent overhang for investors. Trump's engagement, regardless of its form, injects a new narrative into that conversation. It signals that political attention is shifting, which could indirectly influence regulatory priorities. Even a subtle acknowledgement of XRP's legitimacy by a high-profile figure sends a ripple effect through the market. Traders are interpreting this as a cue. XRP is not only surviving legal and political scrutiny, it is becoming a recognized entity in broader financial dialogues. This perception alone can drive market behavior in ways that technical analysis sometimes cannot anticipate. Next is the psychological dimension. Crypto markets are driven as much by sentiment as by fundamentals. When prominent figures enter the narrative, they act as amplifiers for confidence. Investors begin to feel validated, news cycles intensify, and momentum builds. This psychological momentum can trigger both retail and institutional investors to reevaluate their positions. Those who were previously hesitant might now feel encouraged to accumulate, while long-term holders gain reassurance that their patience could soon be rewarded. The cumulative effect can be substantial, influencing short-term volatility and setting the stage for longer-term growth. It's also important to consider how this development interacts with XRP's technological and ecosystem advantages. XRP's fast transaction capabilities, low fees, and growing adoption in cross-border payments make it uniquely positioned to benefit from renewed investor interest. Political visibility acts as a magnifier for these intrinsic strengths. In practical terms, this means that XRP could attract new liquidity, increased trading activity, and heightened institutional participation. Every movement in regulatory or political discourse has the potential to reinforce XRP's utility story, which in turn strengthens investor conviction. Another critical factor is timing. Crypto markets move at lightning speed. News like this can trigger immediate spikes in trading activity, followed by rapid price corrections as the market digests the full implications. Holders must be aware that while this news is positive, volatility is inevitable. Strategic monitoring, understanding market psychology, and being prepared for swings are essential for those looking to make the most of this window. Simply reacting emotionally to headlines can be risky. Informed, disciplined strategies will outperform impulsive trades every time. The global context cannot be ignored. XRP's reach extends far beyond U.S. markets. International investors, payment providers, and blockchain-based financial platforms are all watching these developments. Any perceived alignment with political figures or regulatory signals in the U.S. often reverberates globally, influencing adoption and trading patterns in Asia, Europe, and the Middle East. For holders, this means the opportunity extends beyond domestic speculation. XRP's narrative is increasingly becoming a global story, and early awareness can provide a strategic edge. In essence, Trump's action is not just a momentary headline, it's a catalyst for a chain reaction across sentiment, perception, and market activity. XRP holders are now navigating a landscape where political influence, regulatory evolution, and technological adoption intersect in unprecedented ways. Those who understand these dynamics, monitor developments carefully, and think beyond short-term price movements will be best positioned to leverage this turning point. As we move deeper into the implications of Trump's recent move for XRP, the next question on every holder's mind is simple. How does this translate into market behavior? While we can't predict exact price movements, we can analyze patterns, investor psychology, and potential catalysts that could define XRP's trajectory over the coming weeks. Understanding these scenarios is critical for holders who want to navigate this landscape intelligently rather than react impulsively. First, let's consider a bullish scenario. Political attention, especially from high-profile figures, often acts as a confidence multiplier. Investors see it as validation that the asset is gaining legitimacy, which can accelerate adoption and accumulation. XRP's unique position as a bridge currency for cross-border transactions gives it an intrinsic value that is often overlooked during periods of speculation. In a scenario where institutional investors take note of the political signals, we could see an influx of capital into XRP, driving both liquidity and upward price momentum. Traders watching this closely will notice early signs such as spikes in trading volume, increased open interest in futures markets, and rising activity on major exchanges. These indicators often precede more significant movements, and experienced holders use them as signals to position strategically. On the other hand, a cautious or mixed scenario is equally plausible. Crypto markets are notoriously volatile, and political statements don't always result in immediate positive outcomes. There's a possibility that while sentiment improves temporarily, technical resistance levels or broader market trends could limit price growth. For holders, this emphasizes the importance of context. Understanding the difference between short-term spikes driven by news and long-term value driven by adoption and utility is crucial. Reacting too aggressively to headlines without a plan can expose investors to unnecessary risk. Strategic accumulation, patience, and monitoring key support and resistance zones become essential tools in this scenario. Another critical aspect to consider is the interplay between market sentiment and regulatory dynamics. XRP has historically been sensitive to news about the SEC lawsuit, Ripple's partnerships, and adoption within banking networks. Political moves, like Trump's recent action, can indirectly influence these dynamics by shaping public perception and potentially influencing policymakers. Holders should be aware that sentiment-driven markets can create rapid swings in either direction. making disciplined decision-making a competitive advantage. Understanding these dynamics allows investors to anticipate potential volatility and plan their entries and exits more strategically, rather than simply reacting to every headline. Let's also talk about the role of social sentiment. In today's crypto environment, narratives often spread faster than actual adoption. Trump's move has already generated thousands of discussions across Twitter, Reddit, and other social platforms. This amplified attention can drive short-term buying pressure as retail investors jump in anticipating gains. Experienced holders know that sentiment waves like this are double-edged. They can generate opportunities, but they can also result in sudden corrections. Monitoring sentiment trends alongside technical indicators provides a clearer picture of the market's direction and helps investors make informed choices. Global factors must not be ignored. XRP's appeal isn't limited to the US. International investors, banks, and crypto platforms are all watching closely. Positive political signals in the US can lead to increased interest abroad, creating cross-border demand and strengthening liquidity. For holders, this adds another layer of potential upside. Being aware of global trading patterns, exchange flows, and adoption news can provide an edge that domestic investors alone might miss. The market scenarios for XRP following Trump's move are multifaceted. Bullish momentum is possible, driven by confidence, adoption, and global attention. Cautious scenarios exist too, where volatility and technical resistance limit gains. By analyzing sentiment, regulatory trends, and global developments, holders can navigate this period strategically. The key takeaway is clear. Informed, disciplined decisions grounded in context will outperform impulsive reactions, positioning XRP holders to capitalize on the opportunities this political development has introduced. While the excitement surrounding Trump's recent move is undeniable, it's essential for XRP holders to approach this moment with a clear understanding of potential risks. The crypto market is as opportunistic as it is unpredictable, and navigating it successfully requires both awareness and strategy. Political developments can act as catalysts, but they do not eliminate volatility or underlying market uncertainties. Recognizing where the opportunities end and the risks begin is crucial for anyone looking to maximize their XRP position. The first risk to consider is regulatory uncertainty. Even though Trump's action may appear favorable or supportive, it does not guarantee a smooth path forward for XRP in the eyes of regulators. The SEC litigation, evolving compliance standards, and shifting global regulations continue to loom over XRP's trajectory. While political visibility can influence perception, holders must remember that regulatory outcomes ultimately drive long-term sustainability. Over-leveraging based on a single development could expose investors to sharp reversals if any regulatory news contradicts the optimistic narrative. Market volatility is another critical factor. Crypto markets are highly reactive to news, social sentiment, and macroeconomic shifts. Trump's move has already sparked discussions, speculation, and temporary spikes in trading activity. These rapid fluctuations can be both a blessing and a challenge. For holders, this means strategic patience is essential. Entering trades impulsively based on hype without clear support levels or risk management can lead to losses. Monitoring market indicators, such as trading volume, order book depth, and price momentum, helps distinguish between short-lived sentiment-driven spikes and sustainable market trends. Liquidity risks also deserve attention. XRP's trading volume across exchanges varies significantly. Sudden surges in buying pressure driven by political news can temporarily inflate price, but if liquidity is insufficient, large holders may struggle to enter or exit positions without impacting the market. Awareness of where XRP is most liquid, including major exchanges and over-the-counter platforms, allows holders to plan strategic entries and exits, reducing the risk of slippage or missed opportunities. Another layer of risk comes from social media and misinformation. The crypto space is notorious for rumors, exaggerations, and speculative narratives. While Trump's action has sparked legitimate discussion, it also attracts opportunists, hype traders, and unverified claims. For holders, the key is to focus on verified information and data-driven analysis rather than reacting to every sensational headline. This discipline separates informed investors from those swept up by fleeting excitement. So, what can XRP holders do strategically to mitigate these risks while positioning themselves for potential gains? First, prioritize research and informed decision-making. Understand the broader market trends, regulatory landscape, and XRP's adoption trajectory. Second, consider scaling positions rather than committing all holdings at once. Gradual accumulation or reduction allows flexibility to respond to market swings without overexposing oneself. Third, maintain risk management protocols. Use stop-loss levels, diversify across crypto and traditional assets, and avoid emotional decision-making during volatile periods. It's also important to leverage the timing of developments. Political signals like Trump's move often create short-term trading windows. Experienced holders can use these windows to evaluate momentum, assess risk-reward ratios, and adjust positions strategically. However, long-term holders should balance these tactical moves with their overarching investment thesis, ensuring they are not sacrificing long-term growth potential for short-term gains. Staying informed is essential. The XRP ecosystem is rapidly evolving, with partnerships, technological updates, and global adoption driving its narrative alongside political events. Combining vigilance, strategic analysis, and measured action allows holders to navigate this period effectively. By approaching Trump's recent move as an opportunity framed within a disciplined strategy, XRP holders can position themselves to take advantage of the market's response while mitigating unnecessary exposure to risk. Excitement must be balanced with caution. Trump's action is a potential catalyst, but it exists within a complex landscape of regulatory, social, and market risks. Strategic awareness, disciplined execution, and proactive risk management will distinguish those who capitalize on this moment from those who get caught in the volatility. XRP holders who understand this balance are better positioned to navigate the upcoming weeks with confidence and clarity. It's crucial to consolidate what Trump's recent action means for XRP holders and how you can position yourself strategically moving forward. The key takeaway from the past segments is that political developments, especially from high-profile figures, act as catalysts rather than guarantees. They amplify sentiment, influence perception, and can create immediate market activity, but long-term outcomes depend on a combination of adoption, regulatory clarity, and market dynamics. Understanding this interplay is what separates informed holders from reactive traders. One of the most important insights is the need for perspective. XRP is not just reacting to headlines, it operates within a broader ecosystem that includes technological adoption, banking partnerships, cross-border payment networks, and global liquidity. Trump's move shines a spotlight on XRP, increasing visibility and market interest, but the intrinsic value of XRP lies in its functionality and real-world use cases. Holders who combine awareness of political developments with a focus on these fundamental factors are better equipped to make decisions that align with both short-term opportunities and long-term growth potential. Another essential factor is adaptability. The crypto market is dynamic, and scenarios can change rapidly. A bullish reaction to political signals can quickly shift if regulatory news, macroeconomic developments, or social sentiment change. Holders must be prepared to adjust their strategies without panicking. This includes setting clear goals for accumulation or reduction, monitoring technical levels for price support and resistance, and maintaining flexibility to act on credible information. By staying adaptable, you reduce risk while positioning yourself to take advantage of favorable trends as they emerge. Timing remains a critical element. Trump's move may trigger immediate market interest, but the optimal response is not always to rush in. Observing trading patterns, liquidity levels, and market reactions allows holders to identify high-probability entry points. For long-term investors, the objective is not to chase every spike, but to strategically align actions with the overall investment thesis. Short-term traders, meanwhile, can capitalize on momentum by combining technical analysis with an understanding of sentiment and market psychology. Both approaches require discipline and patience, which are invaluable in volatile markets like crypto. Global awareness is equally important. XRP's market is international, and political developments in the US often reverberate across Europe, Asia, and the Middle East. International investors and institutions can amplify market reactions, creating opportunities that extend beyond domestic exchanges. Monitoring global trends, adoption news, and international sentiment provides a more comprehensive perspective and enables holders to make informed decisions that consider both local and worldwide factors. Let's summarize the strategic approach for XRP holders in light of Trump's recent action. First, stay informed and verify all news from credible sources. Second, maintain disciplined risk management and avoid emotional decision-making. Third, balance short-term tactical opportunities with long-term strategic positioning. And fourth, remain adaptable, aware of both domestic and international developments, and ready to adjust based on evolving market conditions. By following this approach, holders can maximize their potential advantage while minimizing unnecessary exposure. The content shared in this video is for educational and informational purposes only. It should not be interpreted as financial advice or a recommendation to buy, sell, or hold XRP or any other digital asset. Cryptocurrency investments are inherently risky, highly volatile, and may result in significant financial loss. Always conduct your own research, consult with licensed financial professionals, and make decisions based on your personal risk tolerance and investment goals. The strategies and insights discussed are designed to inform and educate, not to guarantee outcomes. Trump's recent move is a pivotal moment for XRP holders, a signal that the political and regulatory landscape is evolving, sentiment is shifting, and opportunities are emerging. By combining awareness, strategy, risk management, and a focus on fundamentals, holders can navigate this period with confidence. This moment underscores the importance of being informed, disciplined, and proactive in the rapidly changing world of cryptocurrency. XRP's journey continues, and those who understand the dynamics at play are best positioned to capitalize on what lies ahead.